Hi, my name is Tyler Brand. In 2021, I founded a real estate private equity company called eCOindustrial Properties. I sourced land, a site about 15 acres, and handled due diligence for what was eventually a 195,000 square foot light industrial development in Denver, Colorado. I found another real estate private equity partner that was my co-GP that helped me construct the building, and the project finished construction in January of 2024. I am currently sourcing and looking for new opportunities. Today, I'd like to talk to you a little bit about the shallow bay industrial real estate space. I'm going to take you through a deal I looked at this summer in Utah County that we ultimately passed on. Hopefully, today's discussion is beneficial. Let's get started. Shallow bay differs from traditional light industrial in the fact that the suites are much smaller. They can range from 1,000 square feet to 2,500 square feet versus light industrial is typically 15,000 square feet to 30,000 square feet on the smaller end. As I mentioned, this site that I took a look at earlier this summer was in southern Utah County, and it was 10 acres, and we were proposing about 147,000 square feet rentable. This is what the building would eventually look like. As I mentioned, the suites are much smaller than traditional light industrial. We underwrote the suites being able to be demised down as small as 2,500 square feet. It was a 10-acre site in Payson, Utah, and we're going to build about 146,500 square feet of shallow bay industrial space. The development had about a 34% net rentable coverage ratio, and the land purchase price was $8 per square foot for about $3.8 million, which was essentially $24 a foot under the building. The type of tenants that would go into the building range from e-commerce, service contractors, HVAC, electrical, plumbing, and various types of storage. As far as our investment thesis and business plan, the population in Utah County was expected to double by 2050, and Payson, Utah is towards the southern end of Utah County where it's still being developed. The business plan for the Payson Shallow Bay Industrial assumes a 150 basis point spread from yield on cost to sale of the project in 4 years. We underwrote up to 5% escalation for rents, which is higher than traditional industrial. The lease-up period will last 3 years, and we would sell at year 4. There seems to be strong tenant demand for this type of product as there is not a lot of new construction. As far as some of the risks, there is a risk in delivering too much square feet at once into the market. For this, we have modeled a 2-year lease up after CO. Lease up may extend beyond the 2-year mark that we are currently underwriting. We could build 2 buildings at a time, then once they are fully leased, then build the other 2. We could go with an industrial outdoor storage product on 5 of the 10 acres. This would reduce the cost of construction and provide a similar yield on cost. Several investors would buy this product. Getting to the meat of this pitch deck, why invest in shallow bay industrial? Small and medium businesses contribute to 44% of the U.S. economy. Multi-tenant industrial properties provide a cost-effective solution to house the operations of such companies. It's a steady income stream between 5 to 50 tenants, reduced vacancy risk, low risk of debt service default, proximity to consumer markets, and building depths provide flexible, accessible space. Industrial buildings with short-term leases and multiple tenants offered investors the opportunity to add value fast, typically 12 to 24 months. Single-tenant industrial properties simply didn't offer the same value-add mechanics that investors sought in a tighter market. Additionally, investors face lower risk from vacancies with more than one tenant. Here are just some charts that kind of back the thesis behind shallow bay industrial. Industrial development recently focused on larger properties. There was not a lot of new development within the shallow bay space, and vacancy rates are still near all-time lows for properties smaller than 100,000 square feet. The chart on the left shows the tightest 20 markets. Salt Lake City is 11th. And then the graph on the right shows small bay spaces have had consistently higher occupancy rates since 2017. This is just some simple back of the envelope underwriting. For the project capitalization and financial metrics, the total project cost was approximately $31 million. We did a loan to cost of 50%. So essentially we would have to come to the table with 50% equity. We underwrote 8.5% interest rate. Rates have changed since then. And this project, the equity amount would be about $15.5 million. For the project budget, again, the total was $31 million. For the land, it was $25 per square foot, which came out to $3.7 million. The hard costs were $143 per square foot for $21 million. TIs and leasing commissions were $18 per square foot, coming out to $2.7 million. Design would cost $2.50 a foot. Soft costs were $14 a square foot for about $2 million. And loan costs were $6 per square foot and $800,000 approximately. Project lease-up summary. We essentially broke it down into groups of 5, so 29,000 square feet would get leased every 3 months, and we started off at $15 a foot and raised rent by 25 cents per square foot each lease-up period. As you can see here, we wanted to sell in year 4, which would have an IRR of about 16% and equity multiple of 1.8 for a profit of just under $13 million. This shows the cash flow and returns for the project. As I mentioned, this site was located in southern Utah County, right off I-15 on the west side. There was not a lot of new development in the area. Here's some photos of the site. This is some information regarding average lease rates for the market. You can kind of see where the 20,000 square feet and under range from. This slide is on absorption. For vacancy, you can tell that the 20,000 square feet and under have the lowest vacancy, as we talked about earlier. This is just an overview of the market. Year-to-date significant sale transactions, those are much larger, so they don't necessarily apply to our business case. Here's just some parcel information. As you can see, the 2 parcels form a nice rectangle. They're each 5 acres. Here is the proposed site plan, 364 feet by 100 feet for a total of 36,400 square feet per building. And between the 4 buildings, that added together equals 145,600 square feet. Here's some market rents and lease comparables. Here's my biography. If you'd like to learn more information about this type of product or discuss co-GP opportunities in the shallow bay industrial space, I would love to chat with you further. My email is sponsor@ecoinprops.com. Thank you.